Good afternoon, ladies and gentlemen. I'll rush through my presentation because the initial time allotted, it has been reduced because of the paucity of the time. So kindly bear with me. So what I'll be doing, I'll be giving the brief of my presentation and then rush through it very quickly. So for a change, I'll be talking about infrastructure finance companies rather than the microfinancing. It is something to do with the macro, mega, or infrastructure finance. See, infrastructure finance companies, they are doing very well in this country. And you must have heard about the terminologies like, they are the supplemental to the bank financing. And they are channelizing the financial assistance for the large project. So all this finance, which is required by major projects, their NBFCs, infrastructure finance companies, they are playing a very major role. So I read somewhere that their total asset size is around 42 lakh crores of rupees and 9,500 NBFCs, they have been registered with RBI. So when I talk about these kinds of things, then the question comes, why to talk about the root cause analysis and how come the issues are involved when I have glorified the operations of the NBFCs in the infrastructure sector in my last few sentences. So if you go through the slide, you will find that the various terminologies like, this apart from the contribution by them, the issues like non-performing assets and the issues like delays in the implementation and the issues like large fund requirements, they come into the picture. So because of that, the creation of the non-performing assets, and that is to the tune of say 8 lakh crore for the commercial banks and about 2 lakh crore for the NBFCs, they have come into existence. If this kind of scenario prevails, then what is going to happen? So we start getting worried about sustainability of the operations of NBFC. That is number one. And the second thing is whether the country will be able to meet the requirements of the infrastructure sector if this kind of scenario is emerging. It has already emerged and the situation, it is deteriorating over the year. So considering that, as you will appreciate that learning is a continuous process in life, and then making improvement is also a continuous process in life. So we don't have to get satisfied that these companies, they have done very well in the past, but what kind of glaring problems are there in these NBFCs? That we have to discuss and we have to find out the solution for that. When I talk about non-performing assets, I just forgot to mention the amount of the non-performing assets and the rate at which it is increasing. So it is a very, very, scaring kind of scenario which is happening. And then another thing is, perhaps you may not be aware about that, the presentation of the scenario regarding the non-performing assets by the infrastructure finance companies. I'll say one ABC infrastructure finance company is there, and they have projected the non-performing assets as 3 to 4%. But if you start analyzing it, what you find that the asset size for the government loans, it is around 4 lakh crore. And for the private sector loans, it is less than 1 lakh crore, maybe 60 to 70,000 crore. Now in government sector, for a NBFC in the PSU domain or in the government domain, it may not be very difficult to recover the money. So you assume the NPAs, they are very much on the lower side or even zero. So most of the non-performing assets, they are on the private side. So in reality, the non-performing assets in the private sector could be as high as 50 to 60%. But then as per RBI norms, there is no set value that it should be up to this level. But I'll say around 3% is a reasonable figure which will be accepted by RBI in this regard. So if non-performing assets are 50%, 60% for the private sector and for government sector, it is very much on the lower side, then you can understand what is the ground reality. In our country, now we are shifting toward private sector participation in the power sector and other sector. So as a result, what is happening? Since the NPAs are very much on the higher side, so naturally the higher NPAs resulting in the private sector, it is going to lead to a very complex situation. But this is not coming to the public domain. So this problem is there. Now coming to the certain suggestions for bringing about the improvement in the operation of the NBFCs. So I'll be explaining 4 points in this regard. The rest of the things they are known very well to the people. The first thing is right people to be placed on the right job. I'll explain it. What is the meaning of this? And then second is improvement in the governance practices which are being followed here. And the third is the policy makers of the country, they have to take note of the existing and emerging scenario, and they have to act very fast to improve the situation. Now coming to the first point, a right person at the right job. You will say that big NBFCs, they are appointing the professionals from reputed institutions like IIM, other places. Yes, those professionals, they are doing very well. They are very intelligent people. So their IQ level may also be very high compared to us. But then the thing is, whether they are having the relevant experience for installation of the project structuring, and they understand the correlation between the activities, this kind of knowledge is there or not. So in the absence of this kind of knowledge, they can create very good financial models. They can make very good presentations. They can do wonders. But then those financial models, they require certain inputs. If those inputs, those assumptions, they are not proper, which is happening day in and day out. You try thousands of the detailed project reports submitted by the borrowers, and you will find that they have done marvelous analysis, but the assumptions are those which are stated by the borrowers in the detailed project report. So the borrowers, they are also very intelligent. They understand that if you have to estimate the project viability parameter, then you have to make adjustment in this figure so that the project viability in terms of NPV, IRR, debt service coverage ratio, etc., they come within the range only, and apparently the project will appear to be viable. So this is what is happening. So unless the people who are working in the NBFCs, they are having this project installation experience, finance experience, governance experience, they cannot do justice with the job. And same situation is prevailing at the board of director level also. Now I have worked at the board of director level for many years. I have worked as an executive director for many years. And there has been a lot of suggestions regarding changing this scenario. But, you know, my first sentence said that this NBFCs, they are channelizing financial assistance. They are playing a supplemental role for the banks regarding financing of the project. So this word finance strikes everybody. Most of the board of directors in the organizations, they are having the finance background. And when I used to make a presentation as an executive director in the board, I used to be told that please don't talk about superfluous things like project features and just talk about financial statements, financial indicators only. So my point was, if I am responsible for sanctioning a loan of 10,000 crore, then why I should not be concerned about the project features? Because if the project features, they are not captured properly. Risk analysis is not done in a proper manner. And the analysis is based on the assumptions which are covered in the detailed project report, DPR given by the borrower, then surely the project is going to become NPA in the future. Now, friends, this is what is happening. A large amount of NPAs are resulting. I was talking about this ABC and NBFC, but I am not mentioning its name. There are 30,000 crores of NPAs out of a funding of 60,000 crores to private sector, while the overall funding is 5 lakh crore. Now, when you divide 60,000 by 5 lakh crore, NPAs will come down to 4 to 5%. No one will be bothered about that. So this is a very difficult scenario which is prevailing. Then coming to another point. See, I am quickly covering all these things at the same time. I am worried about the time factor also. Here I have given an example of a project. It is a small loan. When I say we are giving 7,000 crore of loan, it is a relatively smaller loan, which we were doing from the NBFC side. It is a 2 into 660 megawatt thermal project, 9,500 crore cost, 7,000 crore loan is there. Generally we leave everything to the borrower regarding estimating the cost for completion. Now, if the borrower has given 9,500 crore cost, and if I use my own skills, applying certain empirical relationships, and based on my experience of setting up the power project, I'll find this project itself, rather than 9,500 crore, it can be completed within 8,000 crore also. Then why the cost is increasing? Because we have left it to the borrower only, and they are preparing the detailed project reports and they are submitting it to the NBFCs for seeking the loan assistance. And same is true for the implementation period also. In 7,000 crore worth of loan, if he gives me an implementation period of 42 months, and I get convinced with that, and I don't carry out the root cause analysis to find that it might take 50 months, this 50 months will increase the cost by another 150 to 200 crore. Are we bothered about it? In 99% cases, you can check with any financial institution, all reputed institution in this country, it is not being checked. Basically, the stress is being given on the financial analysis and financial modeling. So this is another problem which is happening. Now, the last thing before I close, see, you must be knowing that the performance of NBFCs, it is judged based on the rising graphs which are appearing in the newspaper. How much sanction is there, how much disbursement is there, and how much yearly growth is there in that, what is the profitability of the company. So these are the parameters only. Are we concerned about how much cost reduction they have done, how much, what should I say, time period has been reduced in implementation of the project? Because these are the factors which will be making an impact on the economy. But as per the prevailing guidelines in this country, your financial performance parameter, ignoring the non-performing asset level, the weightage will be given to NBFC. So who has to set the guidelines in this regard to give the weightage to the NBFC? So that is required to be seen. So these 3-4 factors, if they are taken into consideration, then certainly the performance of the NBFCs, it will improve like anything. And if we are not concerned about this, then non-performing asset level, it will go on increasing. Then most of the profits, it will be passed on to the private sector, and economy is going to suffer in the process. So this table I would like to with you. Just see, I have selected 28 projects, and the estimated cost for completion of this project must be around 1 lakh crore or so. So that ABC Finance Company, NBFC, they have sanctioned the loan. You see the average cost increase is 41.3% over a period of 20-25 years. I have taken the average. Somewhere it is increasing 30%, somewhere it is increasing by 10%, somewhere it is increasing by 150% also. Now, the sensitivity analysis during the course of due diligence, which is being done by NBFC, it is based on the consideration of 10 to 15% cost increase. And even today, if I find that the cost increase in a project is 50%, and next year also 50%, then 40%, still for the new project, I'll be doing it as 10 to 15% only. Don't you feel that this kind of approach will lead to creation of NPS for the project? The borrowers coming to you to NBFC for funding the cost overrun, for relaxation in the loan condition. So what is the meaning of these statements which I am giving? The meaning is that we are pushing the project to become unviable and NPA level will go on increasing. So it is the need of the hour to take into consideration all these aspects, and the corrective action should be initiated in the larger interest of the society and in the larger interest of the economy, which is to be done, which should be done immediately. Then I'll come to last slide now. Well, another point I'll touch, good governance practice. These directors, they are also required to maintain discipline. These highlighted or red colored points, I won't like to explain in detail, but I think you can get the message based on that. To stay insulated with regard to the interest of the other organizations where they are the independent directors. Independent director in my NBFC, he is independent director in other organization also. So he has to be concerned about the interest of my organization, should not take care of the interest of the other organization in my NBFC. Is it happening? That I leave it to you to find out. Recuse themselves. I have never come across even a single case where the director, if he is having some interest somewhere, he recuses himself. Officially in the minutes, it will be recorded that he has recused himself, but he will be sitting there. Suppose I want to speak something, is that project, I cannot explain that. But this thing will not come out. Then in policy formulation, when critical policy formulation is being done, contribution should be there from their side, because ultimately if some problem comes up, they should not blame the full-time directors for that. This is the conclusion, then I'll finish it. To employ right person for the right job at the right time, I have given the example of due diligence in case of NBFCs here to you. Then composition of the structure of board of directors. So apart from the financial experts, some legal expert, some governance expert, some project expert, there should be a reasonable mix of the directors who should be sitting in the board of directors. That is of paramount importance. Otherwise, even departmental heads and managers will also be selected from one particular background only. And that will be a big problem to the operation of the NBFCs. Then zero tolerance with regard to deviation from the desirable corporate governance practices, which I have already discussed. And the last line, policy makers, they should try to absorb all these facts which I have explained. Of course, I am a man with limited knowledge. Many experts are sitting here. They can also support these kind of logics, and the government, they should change their policy formulation to suit the requirement of our country, to suit the requirement of our economy. Thank you so much for the patient hearing.